Good. Welcome to another episode of Trading WTF. In this episode, we have Paul Scott joining us. He's a Forex trading consultant and educator with over 25 years of experience trading institutional, professional levels, and all over the place. Today, we'll be primarily talking about what retail traders are missing out on in their education, what they can learn from the institutional sector, and what they should concentrate on in their learning and trading. A little bit more about Paul. Paul started work on the London Metal Exchange in 1994 for Credit Lyonnais Russe as floor clerk, moved on to Suckton, UK, now Suckton Financial, passed all the exams, got licensed, and he became on a client advisor with telling them how to trade and advising other clients. He moved desks to Suckton to then broker and trade base metals, precious metals, FX, oil, and some soft commodities. Then moved to various other banks and brokers after leaving Suckton. He left the city in 2009, did some consulting for a trade routing system for the LME desks at various banks for a company called BankTech. When finished up, he helped a friend set up an educational company and then decided to teach retail traders what he was taught and knew about how the markets work, coming from the inside of the business. Thanks for joining us, Paul.
No problem at all, Michael. Thanks very much for having us on. Good morning, good afternoon, good evening, wherever you are. Hopefully we'll have a little bit of fun this afternoon, where it is for me. Shoot, what do you want to speak about?
Well, a couple of weeks ago we were talking, you're like, you sure you want me to come on your show, Michael? He's like, I've been on another person's show, and, they had a trading education firm, and my angle was totally different from theirs. And well, I have no angle. The angle here is to uncover every angle that's out there and see what the views are out there and see all the views that are out there. So yeah. Give us a little rundown about your views, Paul, and what we can expect.
Well, I mean, you have to look at the retail trading sort of arena as backwards in comparison to what happens at institutional level. Everything is based around multiple time frames. Everything is based around chart patterns, trend lines, indicators, all of this stuff, which is all fine and very well, but look, that's a tool for analysts. Analysts at banks produce reports. They get sent out to clients. They're always looking at the past. They're not predicting the future. I think one of the big things is everybody's really up about time. You should look at it as something that's linear. It just happens. Events happen. You can have wars, you can have, different presidents, different prime ministers, you can have different central bank monetary policy, you can have different rates of inflation, different, central bank interest rates, so many different things, and it's just all constantly happening. And trying to break that down into maybe a 5-minute or a 15-minute snapshot, it's kind of pointless, because the world doesn't work like that, so there are various factors. I mean, if you looked at it from what I know, I mean, correct me, I could be wrong, but if you look at retail education, it's all based around technical analysis, which only tells you what's happened in the past. It's not going to, can't predict fundamentals with technical analysis. It's all fine and well if you can tell me that Head and Shoulders is completed on any chart, fantastic, but sorry, the horse has already bolted. There's nothing you can really do about it. Could tell me when it's going to start? No. Could you tell me when it's going to finish? No. You can only tell me once it's completed. Pointless. Markets move on the basis of fundamentals. Fundamentals are ever changing. So, I mean, if you looked at the world in which we live in at the moment, CPI figures came out of the States this week. Market moving, really big market moves from there. You can't predict that with a bloody Bollinger Band or a Fibonacci level or some crazy chart pattern. It just doesn't work like that. So 90% technical, 10% fundamental for the retail. No, swap that around. 10% technical, 90% fundamental. Then you're going to understand, right, okay, so why are these markets moving? Markets are moving at the moment on the basis of, like I say, something like a CPI figure, which if you went back a couple of years ago, didn't hold as much sway as it's holding these days. So, like I say, as I've said to people in the past, teaching them, it's an ongoing process. It's not just a case of A plus B equals C. It's a case of, look, you've got to keep working at this. The world changes, things become significant, things become insignificant. Back during the COVID crisis, it was a race to the bottom for interest rates. Now it's a race to the top because inflation's got out of hand. Like I say, these CPI figures that perhaps 2 years ago really didn't matter that much are having a huge impact upon the market. So, it's a case of, it's like kind of like take what you think, and reverse it. Those technical analysis tools, like I say, all great and fine if you're actually an analyst at a bank that's producing reports. That's all good. But you're here to be a trader. You're not here to be an analyst, are you? At the end of the day. So, yeah, I'm sure we'll touch upon, sort of things as we go through here. But yeah, just to say, you Google Forex trading courses, this, that, and the other, and basically, I've been given the okay to use language. Basically, it's a pile of shit. Stop using it. It's not designed to make you money. It's designed to make you broker money. At the end of the day, if you log on to various brokerage houses, they have an educational section. Let's be perfectly honest, they ain't going to teach you how to take their money, are they? They're going to teach you how to lose. It's in their interest. So, if you, again, sometimes take a step back, think about what, who's making money here, then you sort of might start to unravel some things and think, actually, maybe I shouldn't be even contemplating looking at all of this technical analysis stuff. Like I say, great if you want to be an analyst. If that's your goal, fantastic. You want to be a trader, forget it.
I beg to differ about, brokers wanting you to lose money, but I feel like, Paul, you're going to get me into like another friggin' side down the thing, and we can definitely talk about brokers down the line if you want it. I know you're trying to poke me, but we can go there if you want.
Well, there's a reason, when you log on, and obviously, you log on to a brokerage house's website, it's 78% of people lose money.
Yeah.
Right.
Yeah.
Why? Education. If you don't know the rules of the game, why are you even playing? Look, you're a brokerage house. Hey, look, that's fine. Not necessarily directing it at yourself, but let's just think about it. If a lot of people are losing money, why? Is it because they're very well educated and they're, silly when it comes to trading? Is it that the education that they've received isn't actually any good and it's not designed to work? And again, just take a step back, think about who's making money.
Well, I agree. Well, who's making money? But let's focus on the education guys. Like the brokerage side, they're sophisticated. They have all sorts of things. But I definitely agree. On the retail side, it is predatory to the max anywhere you look, and I'm not going to argue that or dispute that any which way of the thing. But let's go into education and making sure that we get it the right way, and give people another angle and an understanding of how it works. And I guess, how does technical analysis lead people wrong? And let's maybe like go into how we see people going astray with technical analysis, and how we can go the right way with building the right picture and understanding fundamental of what's going on in the world and how to apply that.
Well, sure. I mean, there's so many different fundamental analysis tools out there. I often ask people, can you name me one? RSI, great. What is it? Relative Strength Index, fantastic. What's it measure? I don't know. Okay, fair enough. What setting?
The past over this, so it moved this much over that much over this much. The average of that movement over this many days, plus minus, divided by, subtract this. But
it's overbought. It's oversold. Right? Are you
pretty much you're just like doing like that? All the math is telling you is the price was in this range, this number range within this time. That's all it's telling you.
Right, that's all it's telling you. Now, the other thing is what setting should it be on? right? Because there's obviously a myriad of settings that you can have it on. So if you then think about it and you say, right, well, I can name it, but I don't know what it does, and I don't know what settings it should be on, why the hell am I using it? You know, and this is the thing as well. If we understand, and you know, markets, for me, markets do not trend. Markets are in ranges, right? Predefined ranges that have been visited time and time and time and time again by the institutions. So the thing is, if you had something like an RSI and it's like, it's overbought, it's overbought, it's overbought, well, that's rubbish, because the fundamentals have said, right, okay, if the previous value of this particular level was expensive, and the previous times, you know, let's say the previous 3 or 4 times we'd got there, it had been sold off. Now, something's changed fundamentally, and now the value of that particular range, so let's just say you have cheap at the bottom and expensive at the top. So if now something's changed fundamentally, we go through a range, close above a range. Now, what was expensive is now deemed to be cheap. And then we have the upper range as well, which you would deem to be expensive. See, now, if something's changed value per se, your RSI is saying it's overbought, it's overbought, it's overbought. No, it's not. It's not overbought at all. You're expecting, oh, right, the market should be coming down. Why? On the basis of an RSI or something like that. And that's not what happens. So fundamentals, like I say, hugely come into trading, you know, values of things. You know, what value have institutions placed upon a particular level? What value have institutions placed upon a particular currency, one versus the other? So, I mean, you know, if we're looking at the moment, you've got diverging monetary policies between the United States and Japan. So the Bank of Japan has basically said, right, well, we're not going to be putting up our interest rates. Inflation isn't running as rampant as it is around the world. And actually, at the moment, on the basis of there's lots of, you know, bottlenecks in supply of things, you know, materials and stuff like that. It's not actually doing us much harm in having a weak yen, because our goods are now cheaper on the world stage, which means that more people would like to buy them. So you have this, like I say, this diverging monetary policy. If people are of a certain age, or are history buffs or whatever, if we went back to the mid-80s, there was a thing called the Plaza Accord. Now, the Plaza Accord was huge. It was absolutely massive. The US experiences in the early 80s a huge upswing in the value of the dollar, to the point where it got so ridiculously expensive they couldn't export. Companies were losing money because they couldn't export, because the value of the dollar was so high that it made the cost of products abroad ridiculously expensive for other countries to buy them, consumers to buy. And so they wanted to realign the exchange rate system. And that basically meant that the central banks of the top 5, or the G5 nations, I should say, as it was then known, so the United States, West Germany, France, the UK and Japan, they all agreed to essentially manipulate currency rates over a 2-year period. So the Japanese then were, it was like an explosion of electronics. You know, if you're of a certain age, you know, every single thing that you bought was made in Japan. If you were buying TVs, if you were buying telephones, if you were buying VCRs, obviously DVDs hadn't been invented. You know, all things like that. It was
Walkmans.
Walkmans, yeah, exactly, right? So all of these things are really kind of cheap, which obviously helps to really sort of kickstart and, you know, give the Japanese economy sort of a real sort of boom period. So if you looked prior to the Plaza Accords, the value of the yen, let's call it rough value of the yen, was 242 yen to the dollar, right, which makes your goods really exportable. The Americans, on the other hand, you're trying to sell goods and the value of your currency is ridiculously high. When you try to sell them, nobody wants to buy them because they're just too expensive. And so what they did was, it was monumental. They got together, they decided, right, we have to devalue the dollar. So if you then go and look in 1988, the yen was actually around about 120. So you've gone in this very short period of time, Japanese goods being really, really cheap. Everybody wants to buy them. So, wait, hold on a minute. Now they're kind of expensive, and they devalued the dollar. So if you go back, have a look, type in Google, whatever search engine you use, 50-year pound dollar chart, 50-year dollar yen chart, you'll go back and see it, and they're monumental moves. Now, could we be having something like that today? The dollar again is ridiculously strong on the world stage, as you've been seeing. Obviously, you've been following the markets. The yen got up to just shy of 145, the lowest it's been in a heck of a long time. The pound has got down to 35-year lows. The euro, again, really kind of weak. And again, you have to look at it and say, right, so Fed's monetary policy is what? They're trying to curb inflation, but they're putting interest rates up and up and up and up. The dollar is, again, hugely, hugely strong. So if you think about it, it can't just be one-way traffic. You know, it's going to have to get to a point where the dollar has to come down in value. So again, but these are fundamentals. Tell me which technical analysis tool can predict any of that. Over to you.
No, that's an idea that Hey, if someone had monthly bars or something like that, maybe I'm making the argument for them. But yeah, I agree. You're like, it goes way too up. You're like, oh, but you can never predict a high. You can never predict a low.
No.
So
but what you can do is you can understand, like I said, ranges.
Regime changes as well. Like, well, for you, what you were talking about is regime change. They have to change. That was essentially, they changed the way that either the political system worked, the economic system worked, however it is. They made some major changes of how everything's going to work.
Yeah, and so then, like I say, you can't use technical analysis to predict that. You have to build up a fundamental picture. You have to understand, sort of how things are intertwined in markets. How central bank monetary policy affects the value of currencies, interest rates, inflation. It's got bugger all to do with bloody technical analysis. And let me buy this robot for $79 and it's going to make you a millionaire. Really? Don't you think the likes of Goldman might have snapped it up? And, I mean, one thing that annoys the shit out of me really is the rag to riches stories that you see all over Instagram and here, there, and everywhere. And it's like, I put $100 into my account and I'd maintain it into 1,000 by the end of the week, and then and now look at me. Really? Seriously?
Yeah.
It's just rubbish.
You could be me. You could be me. Just pay me.
Yeah.
Pay me.
You could be me, and you ask them a question. I suppose you could ask them any question about fundamentals. No,
they're good politicians, though. They answer every question with no answer.
Yeah. Just buy my software or do this and do that, and everything will be rosy, and we'll be millionaires. Rubbish.
Yeah.
Absolute rubbish. But yes, I mean, like I say, when you're learning to trade, fundamentals are the thing, but just realize that they change. So you have to change. You have to adapt to different market conditions.
I'm definitely thinking things are going to change, like over the long term. Like we can get into politics and stuff like that, but I think politics are definitely affecting where things are going. Like the whole climate type of wave and the whole war with Ukraine to justify inflation, which was really a cause of all that money that was printed. But no one wants to have to blame the government right now because, hey, maybe elections are around the corner and, you can't, we printed money to save you. We printed money to save, hey, I didn't want that money printed. I didn't need that money printed. I didn't vote for that money to be printed.
No. And we're all sending, all these countries are sending money over to Ukraine. Here, I'll take this, take this, take this, take this. Not being funny, but, for me, God, it could be just because I'm, getting on and, I'm more grumpy as you get older. But I mean, if you've got the president of Ukraine down with his missus, having a picture taken for Vogue. What, in the middle of a war?
Well, if you live in the G7, don't read this book because it'll make you grumpy. And he pretty much says in the book. He says the G7 nations got rich off of cheap products and cheap energy, and that's going to change. What's happened? Our products are getting more expensive. Our energy is getting more expensive. He's like, we're moving around too much. You have to move around less. Our energy is getting our gas is super expensive. Can't go anywhere. Yep. So this is going to be my fundamental playbook moving forward. I got to give this another read over the next few weeks and get that figured out. But speaking of fundamentals, that's going to be the playbook. So understanding, I think over the long term, U.S. could be much stronger than the British pound.
Well, that's the thing. The thing is as well, you have to look at it and just say, right, fundamentally, is there any great news coming out of the UK right now? No. Is there any great news coming out of Europe right now? No. And you have to look at it, and it's what made me laugh the other day. I was talking to somebody teaching going to a recession, and it was permanently on his screen, and it said the pound is at 35-year lows against the dollar. I said, what's your immediate reaction to that? He said, well, it's a buy, isn't it? Why? Oh, because it hasn't been this low in 35 years, right? Fundamentally, the dollar is extremely strong. There's nothing great coming out of the UK. Why is that a buy? Oh, because we haven't been down to these levels for years and years. Doesn't mean you're not going to go any further down. The fundamental picture hasn't changed. It's I don't know. But I mean, are these things put there to distract you? Yeah, probably. Probably done on purpose.
Very good. I think it's going further down. I think if the British pound was 350 to the US dollar or the Canadian dollar back in the day, the US dollar, why can't it be, $2 to a British pound or $2 to a euro?
There's nothing to say that won't happen. But again, it's like, I think sometimes as well, sometimes you can have a great trade idea, but it might be at the wrong time. It's sometimes you have to perhaps wear a bit of pain because you might have got that trade right, but you might have got in it at the wrong time.
Tell me about it, man. I'm living that. I'm living that right now. I've called the shorts on a few things and just, a death by 1,000 cuts, putting my stop losses, and they're just wanting to have the perfect thing and just, if I did it right, I would have just taken less of a trade size and had a bigger range to play off of, and then I would have hit. I don't know,
yeah, again, that's the thing, isn't it? It's position trading. So I mean, the thing is not to go all in first trade. Don't go all in because like I say, if you've got.
Yo, bro, I'm watching Wall Street Bets on my phone, man. I'm a degen, all right? No, I'm kidding. I'm kidding.
But no, I mean, the thing is again, how do you suffer with loss? When you got a trade going against you, how do you suffer with loss? And if you're a typical retail trader, and I'm not having a dig here by any stretch of the imagination, but the thing is with loss is it's one of those emotions that we don't generally know how to deal with very well. Because, I'd suggest possibly dealing with a loss of a loved one or a pet or something like that. That's the only time that we kind of really feel it, and then we have to deal with it, and it's not an emotion that we're normally having. Dealing with loss, it's trades going against you. Okay, fine. Trades going against me. Okay, fine. I still have the same fundamental view. Fundamentals are all telling me this is the trade. This is the positions I have, but not necessarily go all in. Scale it. You might be a scale up seller. I've got a guy at the moment just finished with him. Lovely guy from Holland. Love him to pieces. Good dude. He's short of the Dow. And he is wearing some pain, right? Wearing some pain. He said to me, no, look, he said, yeah, maybe I went in a little bit too heavy here, but I should be scaling this up, because then, you know, you'll get that right position. You'll get it sort of at the right value, the right price. Then that market starts to drop. And it's like, right, all these positions that I've perhaps added is now coming down, 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 down. Now I'm in the money. Now, maybe I'm in the money that much that first original trade that I took, which was maybe in a size that wasn't necessarily appropriate for my account, I closed that. So then I have that worry, and that's gone. Now I'm position trading, and now I'm, I've got maybe I've messaged him, after the CPI figures out the States, a quick look at the phone. I just went to the store. I had a quick look at my phone. I was in the car, and I'm like, oh, Dow's down 900 points. So I send him a message. I say, who's a happy chappy today then? And he sent me back, yeah.
But the thing is, that move, 80% of that move happened, and you have to be in the market, because if you had a pending order to sweep you into the market, you would have got filled at the bottom, and you would have missed that move.
Exactly.
So it's, you got to be in the market to catch it, because if you're not in the market, the moves happen, like the moves these days, they happen like in a moment, and then if you're lucky, you'll catch like the trend, but then it moves, it retraces. So if you got to be in it for the long term, so you can catch that actual move. Otherwise, you're just going to try and catch a point here, a point there, and then.
And what's the point?
And then you're chasing your tail. Yeah.
So I mean, it's it's having that longer term view. Is understanding what is going on fundamentally, and saying to yourself, right, well, look, everything is stacked this way. Excuse me. Everything is stacked this way. My mind hasn't changed. The fundamentals haven't changed. Why is the market going against me? If I'm short, why is the market going up? Profit taking rallies. These things happen. If you're short, obviously you have to buy back in order to realize a profit. So sometimes what you have in markets is they'll be down, and then all of a sudden, bang, you'll have a fairly decent sized move to the upside. Now that could very much be a short covering rally. It doesn't mean fundamentally that anything's changed. It just means you have to lock in profit. The profit isn't a profit that you've booked it. And so, take the profit, right? Fundamentally, nothing's changed, right? Short again. Okay, now let's watch that market go back down. So you can have short covering rallies, you can have long liquidation. You know what I mean? It's these things happen in markets, and they happen quite regularly. It doesn't mean, like I say, that fundamental picture has changed. It just means people are realizing profit, and by people, I mean institutions.
Yeah. So. Good. And for the trend to really take off, there's got to be like some big picture news that really happens to confirm that yes, we're moving in that direction, and so that's what takes it to the next level. Yeah,
indeed.
So how would you recommend?
Sorry.
So say you say.
I was just going to say, if you have a conviction, if you've really lined up things happening fundamentally, if you're not trading with your heart, you're trading with your head. Yeah, sometimes you might have to wear a bit of pain. But hey, that's trading. You ain't going to be right all of the bloody time. That's impossible. So sometimes, like I say, right trade, wrong time. But
so how do you say wear the pain then with risk management and position sizing and trade and building up the trade?
Yeah, I mean, that's dependent upon attitude to risk. That's dependent upon size of account. Do you know what I mean? There's lots of factors in there. How much margin you're going to chew up is another.
Well, you give us the play that you would do. Give us like a scenario that you would look at. Give us how you would enter it. And this is not trading advice. This is just inside the mind of how a trader looks at what they would do.
But if we looked at the US stock markets, I mean, they are overvalued. Let's be perfectly honest. The companies out there, it's on paper. I mean, one of those things as well with
Let me pull up the chart. I love this because like, okay, so yeah, like let's say the U.S. markets have gone down a bit this week, and people are saying I already missed the move. So
I wouldn't suggest that you'd missed the move at all. What I was going to say is if you look back during the sort of the COVID period and interest rates are basically slashed to nothing, you can basically borrow money for jack shit. Let's just say that you're Mr. and Mrs. Smith and you live at 111 Acacia Road, right? Kids have left their house, mortgage has been paid, you've got no outstanding debts or whatever, and the bank says, hey, look, we'll lend you 250 grand, we'll charge you 0.5%. Well, stock market keeps going up. Yeah, sure. Boom. We'll borrow that, stick it in the stock market. Look, it's just keep going up and up and up and up and up. Markets just don't always go in one direction. But, there's a lot of money involved in the stock market at the moment that have completely inflated values of companies. If you really actually sat there and broke it all down, you'd go, that's looking a bit toppy. So,
all the multiples are ridiculous. They're trading at way over like the 15 to 17 multiple range.
So then if you look at that historically, every time that happens, what happens?
Crash. They go back down to
fair value.
Back to where where it should be.
Yeah. So then if you looked at that and you had that particular view and you said, right, okay, well, longer term, this stock market looks to me like it's going to go, then I'm short. It goes up a bit again. I'm wearing a bit of pain, but hey, look, I'm going to go short. Nothing has changed in here. And it may go off another bit. Boom, I'm in again. But I'm not overexposing myself. Do you know what I mean? I'm not going all in and I'm going nuts. I'm scaling up. Because then that position, where if I could go all in at one level, you know what I mean? I've now scaled it. My average price is better, right? Then as that market, like I say, then it starts to drop. I'm just going to just sit there and just go, let it happen. One of the things is, again, I think a lot of people suffer from is micromanagement of trades that they have. They're so keen to, be right up its arse with a stop. It's moved 20 points in my favor. I'm going to move my stop 5 pips up and this and that. Hey, look.
Guilty.
Guilty. It's if you've got that longer term mindset, then you say to yourself, right, well, I don't need to be right up its arse. I know markets are going to go up and down. Do you know what I mean? That's just what happens. So we will get a retracement and then it will drop again. But again,
get off its ass, Michael. Get off its ass, Michael.
Yeah. But I mean, if you looked at the crash during the COVID crisis, right? It's just on the Dow as an example. So it comes all the way down and you'll see this big, what people describe as pin bars. I hate labeling candlesticks. It's just bullshit. But if you looked at it, what did it do? It basically came down to the level roughly around the 18,000 mark. Don't get me to say it, to the tick. Right, but it roughly comes down to there. Now, what was that? That was a previous high going back from quite a few years ago. Now, that market crashed very quickly and then all of a sudden rebounded. What's happening there? Average people on the street, I'm making money. I'm making money on the way up. Great, great, great. We're going to make you wear some pain now. So then what happens, the institutions start to sell and sell and sell, and Mr. and Mrs. Smith are then sitting there thinking, oh, shit, the value of our, let's go, sell. We've got to get out of this. We've got to get out of this. And, of course, what happens? Panic, fear. Markets can take months or years to go up, but will drop in days. Fear. Now, who's sitting there going,
institutions.
It's big institutions, right? They'll sit there and they'll go, right, okay, that's enough pain. Boom. Right, now we're into the market. So sometimes this is the thing. If you have that strength of conviction about what you're doing and about the trade that you're in, best thing to do, nothing. Leave it alone.
Are you getting a margin call? Margin call. Oh, yeah.
Yeah. Well, if you get a margin call, then let's be honest, you've overexposed yourself, haven't you?
Yeah.
Your trade, your trade size is too big.
Missed that. What up, man?
Yeah, but I mean, it's you say, margin calls going back a few years ago with Swiss National Bank when they released their peg on the Euro Swiss. I mean, can you imagine that? You're like, hey, Michael, yeah, but you've lost 10,000 on your trade. We're going to need another 10,000 for margin call to keep it open. Yeah, bye.
I don't know you. Fuck off.
Yeah, exactly.
Who are you? Fuck off.
Yeah, leave me alone. I've already lost 10. I'm not losing 20. Thanks very much.
Yeah.
So I mean, that bankrupted brokers and things, or retail brokers, stuff like that. But like I say, if you're trading in a size that makes you feel uncomfortable, why on earth are you doing that to yourself? Yes, people want to make money. Yes, we live in a society where everything has to be done yesterday, and everybody wants to drive a Lamborghini. Yeah, fine.
Well, we all want to be right. So I spoke to one of the owners of FXCM, and he says we ran surveys on our clients, and he says, as Michael, he's like, what is the average? He's like, the average trader, he's like 45, 54. They got a few $100K in the bank. They want to go to the dinner party, and they want to be the guy who's right at the dinner party. They want status.
Yeah. All right.
They want to say, hey, look at my trading account. I was right on this trade. I made money.
Yeah. Everybody wants to be right. You can't be right all the time. And
everyone's smarter than the market.
Well, exactly. If you want to sit there and basically try and dictate to the market what you want it to do, it's just going to go, I'll do what I want to do, thanks. But being right, that's the thing as well. Ego. You can't have an ego. The market's going to do what it wants to do. And it's a case of...
Man, talk about the feelings of trading before. Man, you said traders experience death with losing. Man, I've never felt lower in my life when I've experienced some big losses. I've never felt lower in my life.
Yeah, but you've not been taught to deal with it. That's a problem. You've not been taught to deal with it. I mean, I suppose the only sort of type of people out there that are really psychologically have that on a regular basis would be, I don't know, athletes and sports teams and things like that. They come in, they have a psychologist, and they're try to program to just say, look, losing is part of the game. It's part of any game, whether it be football, whether it be soccer, whether it be hockey, whether it be anything. You can't win all the time. So you are going to lose. How do you bounce back from that? Do you know what I mean? So it's going to sound stupid, but you've got to get used to losing, and I don't mean that as in, losing a shitload of money. That's not what I mean. But it's having the ability to deal with that emotion and kind of compartmentalize it and go, okay, well, that didn't work. That's okay. Because the next trade that I take, that could be the one there. That could be the one that really takes off. So, I mean, I say to people, look, when you lose, and you will, don't stare at the bottom of a bottle of Jack Daniels. And when you win, don't go fucking popping champagne corks and doing cartwheels around your living room. It's like treat winning and losing is exactly the same.
And for anyone who needs experience with winning and losing, I recommend having a family. I got a wife, and she tells me no all the time. And now I have a kid, and I'm second fiddle or whatever. I'm last place. So it's like, it's good experience humbling the ego over there. It's like,
it is. But that's the thing. People. You can't have an ego when you're trading. You're not in control of the market. You're seriously not in control. And like I said, it won't do what you want it to do just because you want it to do that. So you can't always be right. You will be wrong, but get over it.
Well, that's why my tag on Twitter is Wave Rider, because you just got to ride the wave. Like whatever it is, you got to ride it one way or another.
And like I say, it's not always one-way traffic either. I mean, the thing for me is if if you've just started trading or something like that, and you've found, I've got win and I win and I win and I win and I win. As soon as that first loss comes along, you're going to completely fall apart because you don't know how to deal with it. And it's one of those things. I think that the quicker you can get used to it, and I know that sounds so strange, the quicker that you can get over losing and dealing with that emotion and putting it to one side and saying that it's okay to lose. That's part of the game. Can't win all the time. So stop trying to be right all the time, and then sometimes learn that you can even be wrong and still make money.
Yeah. Well, look, what's it called? Well, speaking of institutions and retail and taking profit, it's the case of a $3 trillion market cap for crypto assets becoming $1 trillion after like a couple of like weeks or months. $2 trillion of value evaporates. What happened there?
What happened there? Maybe people stop believing that cryptos are the future, are the thing. I mean, my view on cryptos has always been, hey, look, I come from markets that are regulated, whether it be FCA, in the UK, whether it be ASIC in Australia. I come from that background. I'll only trade something that's regulated. Now, why would I say that? Well, because I understand how it works. These fundamentals, how like we've been speaking about, right? They're market movers. Somebody comes out, big owner of a huge electric car company. We won't mention his name, but he's in the middle of a lawsuit to buy Twitter. He comes out and he says something on a Twitter account of what happens. Crypto market moves. Sorry, but there ain't no fundamentals there. It's markets moved by what somebody said on Twitter. People, I think, have lost a lot of faith with it. You hear of all of the scams that go on as well. Exchanges that get hacked and wallets that get hacked and drained. And I don't personally, I never trade them. I have discussed them with people and people that I used to work with and things like that. And have a good chat with friends back end of last year, early into this. And he believes in it. Fine, fair enough. But I don't. I don't believe in it, and I think a lot of people have lost a little bit of faith with it. Sort of starting to see that, how on earth do you predict market moves on the basis of what? Something that somebody said on Twitter, something like that.
All blockchain is a glorified database,
and every database.
Holy shit! Yeah, it's just a better name for a database. Blockchain.
So I mean, for me, again, if these things are getting hacked, you don't know when that's going to happen. There's no warning. I've seen, companies close. I've seen brokerage houses close. People are just draining money out of it.
Well, that's what I say. So because we talk about people taking profits. So my thing is, look at. And you have Bitcoin, boom, 2008, you have it becomes, popular. And then 2017, buzzwords start picking up and it goes from like not very much to like $8,000 and then $20K. And in that span, it became very, very popular and people said, shit, we can make money off that through transactions. So those are the only people that made money off of Bitcoin, is people who made money off transactions along the way. It does not provide anything. It is not a utility. It does nothing. But what it did do somewhere along the way is they got a lot of people to put a lot of money into it. And between 2017 and 2022, you had a lot of retail people come in after 2017 because it piqued the interest and you saw people getting rich and you're like, ooh, where's that money? How are they making money? What is that? Is this the future of money? Because people are telling stories and building a lot of hype. And then we have the whole easy money and people are selling hype to, all this new generation of, young guys getting assets and taking over their family wealth and like, yo, let's make money, bro.
Yeah.
And, so they flooded in and, a rising tide, lifts all boats. So that's how people get, rich at the beginning. Now it gets sophisticated because institutions come in, they throw some money in because, hey, if money can be made off there, let's do that. So they start throwing money in, making money off transactions, lift it up, they know how to do it. Spreads are huge, with spreads being that big, and you're able to make percentage with $20,000, $50,000 prices, and you're making 1-2% off of like commissions, or you're making even 0.10% in thousand times a day. You're laughing because it's gravy. So you're making gravy.
We've been doing it for years.
Exactly. So they come in, institutions come in, throw the money at it, and then they rise it up. Retail comes in, they say this, oh, let's buy it as it's going up, because retail, as it goes up, they want to be a part, FOMO. And then institutions say, yeah, we had our fun, let's leave the party.
Yeah.
Retail's saying, what happened to the party?
Yeah. Well, it's the same thing, same thing with gold. You remember when gold broke and closed above 2,000?
Mm-hmm. Yeah.
Right?
Yeah.
The world and his wife were like, oh shit, gold through 2,000, this is it. It's going to pump. It's going to go. That's a pump and dump. Like, really? Why? Why is it going to take off? And that's the thing. The minute you hear about the average man in the street saying, oh, you got to buy crypto, you got to buy gold, get the fuck out. And, it ain't going up. It's going down. And so as I've often said to people, sometimes I buy to sell. Sometimes I sell to buy. That's how banks that's how banks play a game. It is a game.
Yeah. I sell to. That's interesting. Yeah. Because you give it to everybody and then you get it lower.
Yeah, of course.
Yeah.
That's the thing. So if I'm already long, let's just as a prime example, I'm already long a gold. Let's say from 1,700, right? It's going up. I'm pushing out all these reports. It's going higher. It's going to burst through 2,000. Right. So when the average person starts to buy gold, let's say through 2,000, all they're doing is they're buying it from me and they're hoping me close my position out, right, from my original long. And now, because there's this big furore, gold's through 2,000, we should buy the shit out of it. Yeah, now I'm going short. Thank you very much. So sometimes I sell to buy and sometimes I sell. It's all about positioning yourself in the market by doing the opposite of what you told every other fucker to do.
Yeah, I like how you say it so quietly. It's like you're like, this is my secret, but I'm not saying it.
I didn't even notice I'd done that.
Yeah.
But that's the thing. It's how do you position yourself and get yourself the best price, and you'll also use your customers to do that as well. I'm talking institutional level. You'll use your customers to do that, because again, you have to think, if you're sitting at a bank, who pays your salary and who pays your bonus? It's the bank. It ain't your customers, right? It ain't your clients. So
they help me get my numbers. They help me get without my customers, I ain't getting my numbers.
But you screw them over as well. So if you send a report, again, this is the thing, and how how banks work. If I want to go short the euro, what do I tell everyone else to do? Buy it.
Yeah, that's bank reports. Yeah,
bank reports.
That's for years.
Because the other
Henry Blodgett.
Yeah, because the other great little thing is as well, if you actually read these reports that get sent out, it will say, small writing.
We have positions in this way. Right?
It will say we have not necessarily used this advice for our own trading, or words to the effect, you know.
Yeah.
So you look at it and then you say, well, how much credence is there actually in these reports that are getting sent out? Not a lot. But if I can get you to do something to help me make money, but you don't even know that you're doing it, happy days. I make money for the bank. Bank pays me. Happy days.
Well, let's you know, there's been some fresh news with we have a new king, and
Yeah.
you know, the queen. So what does that mean? You know, for someone who doesn't know much about the kingdom or whatnot, we're just proper. I'm just in the Commonwealth over here.
Yeah, well, the country is sort of still in shock for well, I'd say the majority of the population of the country. The Queen was the only sort of monarch that we know. So it's strange. It feels weird that she's not going to be there, but life goes on. You know, life
Does
goes
the
on.
monarch have a place to play inside the side afterwards? Like, it feels like you said, it feels like she was what it represented, and
yeah.
What is it afterwards?
Yeah, what does it? Yeah, exactly. What is it afterwards? I don't think any of us know at this moment what type of king he's going to be and what's going to happen. You'd like to think that he would take the reins, so to speak, and just continue on in the same vein. Will he try to modernise things? Don't think so. I think he'll do his time. I think if anybody's going to sort of modernise things, it'll be William and Kate. Yeah, it's a sad time, but these things happen. These things happen, and you just got to get on and deal with it. And again, it's like we were talking about loss earlier. This is loss for a nation.
Yeah.
And we have to deal with it, and get over it. And yeah, it's just, like I say, it's just weird. You're going to pull your banknotes out, and through your whole life, it's just been the same picture, essentially, same person. That's going to change. Yeah. Stamps are going to change. It's like that. You've got to get used to singing "God Save the King" instead of "God Save the Queen," and it's a period of adjustment. But yeah, like markets, ever changing.
Yeah, well, I've seen probably at least two or three, at least three different versions of the $20 bill, the Queen on it, over here over time. So, yeah.
So yeah. What does it mean for you guys? It's more interesting. What does it mean for us? What does it mean abroad? Head of state, obviously you're based in Canada, right? So head of state. I mean,
well, it means something totally different over here. Like I think it's like for Canada, like it's interesting because we had a federal holiday of mourning declared, but then the province said no, we'll just have 1 minute of mourning for it. You're not going to have a day off. You're just going to have 1 minute to stand and observe it, a moment of silence. So it's interesting because the federally they want to recognize it, and then provincially they're kind of saying they're minimalizing it. They're saying thank you, but bottling it up. And seeing how you talk about it, you're patriotic. Like, it means a lot to you, and for me, I see it as it changes something. But I definitely know it would mean something to my parents, because I remember being a kid and watching in their bedroom when Princess Diana had the car crash, and everyone was like, but I feel that moment was a lot more significant than this moment was.
Yeah, I think well, there's an air of inevitability with the Queen. She wasn't getting it.
Yeah, you knew it was happening.
Yeah. So
but the sadness for Diana versus like the sadness that people are feeling now, I'll tell you, everybody here, like there's a big sadness for Diana, but that was a long time ago. That was 30 years ago. A lot happened. The world is like, but it's funny because like the world was like a smaller place back then, but it felt a lot closer together. And now the world is a lot more connected, but it feels further apart than ever.
Yeah, because now everybody can voice and share their opinion across any sort of social media platform, stuff like that. I mean, there's a great tweet. I'm into motor racing a lot. One of the guys, basically he put a tweet up and he said, well, whatever your view today, don't be a dick. You know, it's like whatever your view is, just, you know, if you're ecstatic that the Queen's died, just don't put it up for other people. You know, or if you're, it's because it just creates division. I think that's what a lot of social media has done. It divides people rather than brings them together.
That's what we're going through right now, is they're trying to erase the history, and like that I think that's the reason why there's that mixed reaction all over the place outside of the UK, because they're having that big place where they're trying to like take a dump on history, and
trying to do things like that. I tell you what, I'd say there'd probably be more people in Canada, you know, sort of upset that the Queen's passed than sudden Justin Trudeau.
Yeah, you know, everyone is. It's kind of like it's been a quiet week all around. Like it like everywhere, like the whole world has definitely felt like a little bit quieter this week. So I'll give it that.
Yeah, it's been solemn, but you know, life goes on, and that is the human experience, isn't it? Life goes on, and you have to deal with things as they come along.
And and so that might be an interesting thing to see, is how the G7 plays out in the future, if that's going to be a story, because you have the BRICS emerging as a powerhouse moving forward as well. So
we'll see. But I mean, that's the thing, isn't it? Things change. Shit happens, as the saying goes, and just got to deal with it as it comes along. And that's just to bring it back round to trading. Just to bring it, you know, things happen. Adapt. You have to. You're not in control. Never have been. Never will be. So.
Yeah. Well, in honor of keeping things on time, we got to 12:30. I don't think we covered any of the questions we had. We just had a lot of fun talking about what's it called?
I wrote a shitload of things down and we didn't speak about any of them, so it doesn't matter.
For another time.
Yeah, exactly. We'll save that for another time, and we'll make sure that we definitely go through them.
All right, awesome. Can you tell everyone how they can get in touch with you, how they can find out more about you?
Sure. Yeah. So I do run sort of like a mentoring program on a one-to-one basis. I truly believe if you're going to teach somebody, do it one-to-one. I do run a website. It's paulscottfx.com. Nothing flash. Title in the top left-hand corner is trading without all the bullshit. Email is paul@scottfx.com. I think what I've said is allowed to roll shit today. Fine, fair enough, don't care. If you like it, get in contact. Not everybody's cup of tea, because basically just tell it how it is. So yeah, that's it really. You know, not here to sell a course, not here to sell anything really. I just like chatting with, you know, like-minded people, and Michael's been very gracious to have me on today, and it's been fun. Thank you very much.
Awesome. Well, I appreciate it, Paul. Everyone, you know how to get in touch. Thank you so much, and we got to do this again soon.
Yeah.
Have a great evening over there. Take care, everyone.
And you, buddy. You take care. Have a good afternoon.
Thank you.